I'm Allie Barefoot with Cotality, and this is Data in Context. On this episode, it's a part of a mini-series that we have on our YouTube channel that breaks down and dives deeper into Cotality's monthly home price index report. What we're seeing is housing inventory right now is actually at its highest point since 2019, and prices are slowly starting to soften in some parts of the country. But in other regions, it kind of seems like they're going in a completely different direction. For example, if we look at states in the Southeast, Florida, Texas, they're actually seeing home prices decline, while states like Alaska and Wyoming are suddenly seeing home price growth. In fact, 20% of 411 metros across the country saw prices dip in September. And also, affordability pressure has yet to really let up. So the country is kind of telling two different tales at this moment in the housing market. So to break down that data and to dive deeper into it, we're going to be talking with Cotality's chief economist, Dr. Selma Hepp, to give us a little bit more insights as to where the housing market is right now and where it's heading. So let's go on ahead and jump into today's questions with Selma.
Selma, welcome back to Data in Context. Thank you so much for joining us again.
Thank you, Allie, for having me back. It's always a pleasure to talk to you.
I can't believe we're in November. We're talking about September data. So I'm just going to go on ahead and ask the really big view here is that we're seeing inventory hit a high note that we have not seen since 2019, which feels like a decade ago. And prices are starting to feel a bit squishy. They're starting to get a little bit soft, but they're not quite there yet. Is this just a typical seasonal cooling or a part of a bigger trend?
So going back really, to last summer. So, as a result of that, the year-over-year increase has been cooling off, and we've seen it come down from, say 3-4% last year to, very low 1.2% in the latest reading. So that's really what's it's been a longer term trend, or at least a year and a half trend of slow or almost no overall appreciation in terms of home prices.
And you mentioned that despite some changes in inventory levels, 75% of our top markets are still labeled overvalued. What is a home price surge? When does a home price surge go a little bit too far? What do you think is the critical element that finally brings these prices down to earth? Maybe not so overvalued, in your opinion.
Yeah. Well, the surge in home prices really becomes unsustainable when prices disconnect from local economic fundamentals, which are, your wage growth, your stability, your job stability, your affordability, and to some extent also in migration to that market. And in many markets that are most overvalued at the moment, the in-migration component is the one that has slowed the most and is really leading to that cool down in home price appreciation. But really, many markets continue to be overvalued, even though, we talked about home prices slowing and the rate of home price appreciation slowing. Still about 75% of major markets remain overvalued. And that's despite the increase in inventory that we've seen over the last, year and a half. You mentioned how inventory is now at the closest level that it's been since 2019. And so that has helped bring some measures in more at the more sustainable level or more balanced dynamic between prices and local economic fundamentals. But many again remain overvalued.
I really loved your K-shape analogy that you broke down in the November home price index report. For our listeners, can you kind of paint a picture of what that K-shape housing market looks like and who's thriving in that market and who's kind of on that lower leg of the K?
Yeah, so the K-shaped economy it doesn't just apply to the housing market, but it's a trend that we've been seeing overall in the economy, including consumer spending, which drives overall economy. And so what we see is that upper arm of K, those are higher income buyers in the housing market. Those would be also luxury buyers, and those buyers tend to thrive at the moment. They're also seeing their wealth increase from rising equities, and overall increase in their household health. Uh, oh goodness, I'm sorry.
No, no, please do
It's
not
not.
apologize.
It's not my day today.
Oh, I feel that 100%. You are fine. I
Okay.
can I can re-ask the question if that's easier, or you can just pick up where you left off, whichever one.
I'll start with the upper arm of the K.
Okay.
So the upper arm of the K, the K letter, are higher income households, not just home buyers, but also luxury buyers in the housing market. And what they've benefited from is that we've seen a significant increase in equities that have lifted both their household wealth, but that also fueled what we called a wealth effect. When you feel richer, you tend to spend more. And so that has been supporting the robust spending and for consumer items, but as well as in the housing economy. The lower part of the K arm, those would be the first-time home buyers. Those would be lower income buyers that have faced much more significant affordability barriers due to just overall inflation that we've seen over the last few years in housing, particularly looking at how much higher mortgage rates are, how much overall home prices have gone up, how much non-mortgage costs have gone up as well. And at the same time, this segment of population has had a much more stagnant wages than the upper part of the K arm. And so, even though we do have more listings, and particularly in those markets that tend to have a little bit higher share of lower income households, for them, the home ownership remains really out of reach because it's just gotten so unaffordable.
Right. And I know that we've talked in previous episodes about how inflation and unemployment, these are things that are definitely contributing to the unaffordability factor of the housing market. But there's one area that I've been keeping track of on your home price index reports, and that's just the Northeast. I mean, it is thriving right now. Prices are still surging and we're seeing great growth there. What are they doing right? And I bring that back to job security, Is there just a strong finance or biotech jobs there, or is there a fundamental market dynamic that is protecting them from this national price slowdown?
Yeah, it's actually a little bit of both. Those markets do have more diversified job labor pools and types of jobs. So, we're talking about finance, biotech, healthcare, and education sectors that all provide income stability. I also mentioned how rising equities are lifting household wealth and fueling that strong wealth effect. That's particularly pronounced in areas surrounding the financial center like New York or, maybe Boston, Philly, and those markets in which people are benefiting from rising equities. Um, what is different though in Northeast versus South and Southeast, where we do have slowing home price appreciation, is that Northeast continues to see very strong supply constraints. So inventories continue to be limited, which is driving competition among buyers and pushing the rate of home price appreciation higher. We talked about how where inventories overall are at the moment compared to where we were pre-pandemic, but in those northeastern markets, inventory remains 50 to 60% below 2019 levels. So, significant undersupply. At the same time, what's interesting in those markets is, you still have those hybrid work dynamics. Maybe people are not moving thousands of miles away, but they're moving they have access to more affordable, smaller markets that are adjacent to these big employment centers, and that's where they're moving to. And those markets are actually notably more affordable than many other markets, because they didn't see the same rate of home price appreciation during the pandemic. And so now, there's some of that catching up because people
Right.
are flocking to those markets.
Yeah, and to stay on topic here with the Northeast, a couple of metros that I've noted are Newark, New Jersey. You've got Allentown, Pennsylvania, Albany, New York. These are areas specifically that we saw they actually had monthly increases firm up in September, and they're up about 1% from that prior month. That feels like a pretty surprising turnaround and a pretty significant growth jump there in just 1 month. So, what is happening in those specific metros that's fueling that surge in prices?
Yeah, so it's important to note this 1% appreciation in just 1 month, because nationally the home prices were actually down almost a percentage point. Not as much, but they were down
Yeah.
in the month of September, right? So it's notable to see that strong appreciation, continued actually strong appreciation, because this is something that those markets have benefited from. And again, it's bifurcation. It's that strong labor markets we talked about, commuter appeal, relative affordability compared to nearby major metro centers, and then demand. Again, from these hybrid workers that are looking for suburban value, they can get a lot more in these smaller. We're talking about Albany, we're talking about Allentown, Pennsylvania. So access, but much larger. You get more for your buck in terms of the home that you're buying.
Right. And my last question I have here for you, Selma, is the way that we always end these episodes is, what is one key indicator that you're going to be watching in the housing market closely over the next few months that can kind of tell us where the market is headed?
Well, first, let me emphasize the importance of government data that we're going to start receiving again. And in the last week's labor data, we saw that the slowdown may not be as significant as initially thought. The other, important readings are inflation readings. And, while these two are not only important for the Federal Reserve in terms of determining what their next step is, but it also tells us a lot about the sustainability of housing, not just housing demand, but consumer spending. Where are consumers currently in terms of how much they can spend, how much they're willing to spend, and if they're going to be buying a home in the spring home buying season. You know, not not to emphasize the importance of where mortgage rates will be, because the labor market is showing some some continued resilience. I think mortgage rates are also going to remain a little bit elevated. And, we saw over the course of last month or so, mortgage rates coming down. That has helped boost some home buying demand, because, we do see buyers coming back as soon as mortgage rates come down, right? So depending on where mortgage rates end up settling, that will impact how we go into the next spring home buying season.
Yeah, absolutely. And, I'll definitely be keeping an eye on the Northeast as well and seeing if maybe they share some wealth with the southern states and we can maybe try to balance this country out. Right now, it's feeling like a tale of two countries and how home price growth is showing up in some places and declining in others. So there's definitely going to be a few key factors here to watch over the next couple of months, which of course you will keep us in the loop with your home price index report. Selma, thank you so much again for taking this opportunity to break down that data and give us your insights.
Thank you so much for having me again, Allie.
Thank you again to Dr. Selma Hepp for joining us on our monthly mini-series breaking down Cotality's Home Price Index report, and thank you guys for listening. If you haven't already, go on ahead and subscribe to the channel, and if you want to find out more, as always, head to cotality.com.